Or Darren channeling through, man, telling man off. So we're here. All right. So like I was saying, is there a particular pair that somebody would like to go through, and we can try and analyze? This could be a stock. This could be a future. This could be a forex pair or indice. Anything. We are gonna break it down. We are gonna break it down. Or would we like to have a slightly different session? I'm thinking, should we look at crypto stuff this morning? No, not this morning. We won't do. But we can have whatever you guys want to do this morning. I'm here. I'm energized. I'm activated. Just come back from the gym. Did a little buys. If you haven't noticed yourself, I'm joking. I'm on this morning. I'm sorry. Yeah, but let's go. What are you saying? What do you want to do this morning? Is there a particular pair someone wants to look at? Come on, don't be shy. Don't be shy. Is there a particular pair somebody wants to look at? Is there something that you trade predominantly that you want to look at? Don't be shy. Don't be shy.
Happy to go with gold. Happy to go with the flow. Maybe gold or US 30.
No problem. So that's the three we're going to look at. We're going to look at GU, gold, and US 30. We're going to do it in that order, or we're going to do it in the order you said. Gold first, XAU USD. All right. Now, this is the gold derivative. Okay. What do I mean by derivative? Somebody tell me. Somebody understands what we're saying. What do I mean by a derivative? Gold derivative, XAU USD. Let's go. Just show them that we know what we're talking about. That we're actually doing education every single morning. All right. What do we mean by a derivative?
The ticker sign. So meaning how you access it on TradingView.
No, I'm not going to give you that. All right. It's not the ticker sign. But good attempt. Don't guys, here is the place where you're making mistakes. Don't be shy to make mistakes. Only those people who make mistakes learn, all right? What do I mean by a derivative product? I'll give you a hint. Ask me if you got free hints. You can phone a friend, you can, 50-50. Like, let me know if you want me to give you a hint. Come on, let's go. It's morning, it's breakfast time, it's breakfast club. Sun is shining, you have air in your lungs, there is everything. Everything's going good. Yeah. Come on, you want a clue? Do you want a hint? What do I mean by derivative? What do I mean that this XAU USD is a derivative market? What do I mean? Well, look, nobody wants to put a hand up. Can you buy XAU USD? Can you purchase some XAU USD? Can you purchase?
No, you can't.
You can't buy XAU USD. So what is it? It doesn't exist. This thing here, XAU USD, doesn't exist. All right. Let me show you the difference. Have a look at this. Let me show you the difference because you guys call it gold, but it's not gold. It's XAU against USD. Gold is this. This is the gold future. Yeah. This is actual gold. You are actually buying gold here in the futures market. So much so that in the futures market, they have contracts month to month that you must roll over your contract. It's basically saying that I want to buy gold between this time and this time. At the end of the month, you have to roll over your gold future contract. Now, normally your broker would do it automatically. All right? Because your broker understands that maybe you don't actually want gold. But in theory, if you buy gold and your gold future rolls over at the end of the month, you could get a delivery to your house of gold or wheat or oil or aluminium or strawberries in the futures market because you are buying the actual thing. Look at this. When I go to futures, look, these, let me take out the word gold. These are the actual thing. Look, crude oil. It's not crude oil against US dollar. Gold. It's gold. Bitcoin is Bitcoin. Yeah, platinum here, it's platinum. Silver, it's silver. Yeah. You're actually buying the actual thing. So your Boeing, for example, yeah, Boeing, one of the big airline companies, they actually buy aluminium. I mean, the actual thing. Because they need aluminium to make planes. Costa actually buy cocoa bean. Am I making sense? Do you understand what I'm saying? Costa actually buy cocoa. Boeing actually buy aluminium. But we are here looking at XAU against US dollar. It's just a comparison. We're just looking at a derivative product, which is showing you this thing against that thing. And we are making bets on whether we think this thing is going to be stronger than that thing. So it's a completely derivative product. So guys, understand it. Yeah. Understand what it is you're doing, what you're trading, and the difference. Okay. No problem. So look, we can see here that this gold market has been bullish, going up and up and up and up and up. Yeah. To the sky. Yeah. And what that means to us is that in an ideal world, we would like to be buying or selling this market. What would we be ideally liking to do with this market? Let's go. Let's get some participation. I know you're probably on the train or the bus or waking up, or you're half putting your trousers on or brushing your teeth, or maybe you're at work, just trying to listen quietly. All right. But let's get some participation. Ideally, in an ideal world, what would we like to do with this market? Ideally. Well, ideally, guys, we'd like to buy this market because it's a bullish market. We'd like to buy it in an ideal scenario. We want to buy in line with the trend. All right. I'm gonna stop reaching out for the participation. It sounds like people are busy this morning. All right. And I'm gonna say, look, we ideally want to buy this market because the market is bullish. We want to buy it in line with what it has been doing. However, sometimes that's not always possible. Okay. And it's either that we are not going to trade the market, or we are going to wait until things get in our favor or get into our in line with the trend. Okay. So say, for example, here, look at the gold market. This is the weekly chart, meaning every single candle you see is a week in time. Now, we don't have to be going back this far. We're day traders, but it's nice to know overall what this market's been doing. Have a look. This market's come up to near the top. Let me try and draw this line a little bit better. In fact, it's all right. I'm just going to leave it. It's come up to near the top of this range. Okay. Near the top of this range. And we're wondering whether right now they were in a premium. Yeah, we're in a premium, whether or not this market is going to try and get back down to the discount, which is this bottom white line here. That's the question I'm asking myself. Well, in fact, I'm lying. The first question I'm asking myself is this going to get down to the bottom of this white line? Let me change the color in here. And I'm also making sure that I'm trying to look in the past here for data points. Now, I know in gold, I'm not going to find any data points above this level here. These three kings were for a long time, this pair, this here, this here, for a long time were all-time highs that the market you see broke through those all-time highs. Why would gold be rallying so hard at the moment, guys? Is there any reasons why you think gold might be pushing up so aggressively over the last year or so? Is there any reasons?
There is conflicts in the world.
There you go.
Gold is a safe haven.
There you go. Gold is a safe haven. There's lots of conflicts in the world. So where people are thinking to themselves, now gold's too expensive here, premium and selling. Gold's too expensive here, premium and selling. People think to themselves, listen, let me tell you something. The world's going on to shit. I'm putting my money in gold. And they bought and bought and bought, and we completely decimated these highs. We had a reaction, grabbed the liquidity first, nam, 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 came down here, then started to push up, and we've got all the way up into this level here. Now, how have I created this white line angle is by just taking two data points from here and here as this market moved off of this yellow bigger Russian doll. Yeah. And I've pulled it out. Does that mean that the market's definitely going to turn around there? No, it doesn't. But it does mean that when it hits there, as you've seen it hit there and start having a reaction, my eyes and my ears are pricking up, thinking to myself, could this be the premium level where this market's had enough and sells off? Now, when it comes to gold, I think it's really in your interest to definitely look at fundamentals in regards to gold, because it's so bait, it's so commonly attributed to this safe haven asset. I definitely think the fundamentals of what's going on in the world, really, really dictate gold. Okay, as in they have an effect on a lot of other things, but they really, really have an effect on gold. Okay, now have a look. I'm going to draw some lines in here. I'm going to draw a line like so. I'm going to draw a line like so in here, okay? And I'm going to drop my time frame down. I'm going from the daily to the 4 hour. So with the 4 hour time frame, now I start getting some more detail, things looking a little bit clearer. And what I can see is I can see that this market was pushing bullishly up here. Then we got to this level up in here and we started to kind of go sideways in here. Yeah. Kind of was in here doing the hokey cokey, a little piece. Okay. And then the market indicated pow, what it wants to do, made a correction pow of what it wants to do, and then continued pow down here and broke structure of these lows. It broke structure of these lows here, but didn't break structure of this candlestick zone and this swing low over here. And it might look a bit better if I draw in the previous range of this market pushing up bullishly. All right, have a look. Like so, this market was doing this, okay? It was doing this. Why have I drawn the lines like this? Because I must touch this last low before the highest point. Okay, I must do. And I must get the energy of what the market's been doing, which I can probably fix a bit like this. Okay, so the market was trading up within this range. You see, so this little swing low, which is a swing low in this range, in this blue range, because it's touching the top or the bottom. Remember, sometimes there are minor lows. For example, this is a minor low within that blue range. Can't see it. This white line is a minor low. But this one touching the bottom is the swing low within this blue range, just like this was a swing low area within the blue range, just like this around here is swing low area around this blue, on that, all touching the line, okay? Not minor. But so we came down to this swing low area, and though the market was making lower lows, lower highs, lower lows, we have started to do a little sideways hokey cokey in there after tapping into that candlestick zone. All right? We started to kind of be trading within this range. Remember what I say to you guys, this is really, really important that you're able to do this quickly and confidently, being able to see the different cycles of what the market's doing. You see, right now, I can see the market, like I said, broke structure, boom, indicated, corrected, continued. Even if you hit the button here, at the closure of this candle down here, and your stop was above here, you'd be in the red as the market immediately made a retracement, closing up this imbalance. Well, to be fair, you would have been a bit silly, or not silly, but you would have expected this market to retrace. Why? We had 4, 8, 12, 16, 20, 24, 28. You might as well count this little green candle. Yeah, 32, maybe 36 hours of red bearish action happening in here. If I go to my daily, it's going to look like a big old red candle. Big old red candle. And when that candle closed, you would have surely been expecting what to have happened. After that big red candle closed and one opened, what would you have expected to have happened? So let me rewind to about here. You saw this big red candle, then you saw another one open up here. What would be your expectations? What do you think may occur? What do you think may occur? What's possible after this big red candle formed?
A correction of that big red candle.
Yeah, as in a correction of that big red candle to close the imbalance. That would be 3 candles. There'd be a candle here now. There'd be 3 candles. So even if you saw this market indicate on a smaller time frame, we're looking at 4 hour, correct, and then continue, and you entered here, your stop would have to be above here. Let me show you where. In the expectation that the market's going to come and at least close this imbalance. If I go to my 4 hour time frame, sorry, all right, then you'll be able to see how that market did exactly that. All right, and at the moment now, you'd be concerned of whether this market here, which is now even trading in another quite narrow range like this, whether or not this market was going to break structure bullishly or break structure bearishly. Okay, but we're not in the trade, and we're able to look at it on look at it on an hour. Look how sideways that little energy right now looks. See, maybe you couldn't see just a minute ago, but when you drop the time frame, you get more detail. What would I do? I'm going to put some alerts either side of that smaller consolidation within the big consolidation. All right, one above, one below, crossing down. I'm also going to put some alerts above the bigger consolidation here. I don't know why this thing makes me have to do it 10 times, but let's go. Crossing up. Yeah. And one over here crossing down. All right. Now, I would like it to cross down. It makes sense to me if it crossing down and the market being bearish on the basis of our bigger market structure, and maybe this market ping-ponging on that white line. However, in the light of fundamental factors, okay, and the fact that we are in the middle of this bigger yellow range, I have to be very, very cautious that this market doesn't say, mate, they're still blowing people up in Palestine, kids and schools and hospitals, and other countries are saying they want to go to war now as well. What's the new one? What's the new? I said there's a new one now. People want to go war. There's another country want to do something. I think there's a new one. I know. King Louis will be able to tell me. I don't know. More war. All right, and it's potentially this market deciding, we want to keep going up. So I have to be cautious of that. So what I'm going to make sure I do, have a look. Can you see this range, which I haven't got in there? I'm going to put a nice solid pink line. Touching these data points could be the new range. Have a look, touching from down here. Can you see that? I'm going to make it a pink line. Pink, make it even a bit bigger. Maybe this could be the whole new energy of this market saying, you know what? We want to put our money in gold. The world is unsafe. We're unsure. All right. So maybe right now, this hokey cokey is just going to be its hokey cokey and it's going to decide to push. I don't know. My concern is because I'm in the middle of this yellow range. I'm in this bigger yellow Russian dollar. I'm neither in a premium nor a discount. I'm in la la land, which ultimately I don't like to be in la la land. On this smaller white range, I am in a premium. I'm thinking to myself, yes, we could start running down here. So if market structure starts breaking, indicating, and showing me, we might be more trying to run down to this white line. Or, because we are also in a premium of this little blue range, at least run down to this blue line, which will be in the middle of that white range. So you see how I'm balancing all of these possibilities out. The possibilities we're in a bigger yellow range, which is a bit, It's not to say that we're at the top of this yellow range. If this line here was here, I'd be saying, my gosh, we're at the top of the top of the top. That's what I'd be saying. I say we're at the top of the top of the top. This is looking very, very strong. Kind of not. We're in the top of some other smaller ranges. Yes, we are. We are in the top of some other smaller ranges. Okay, this blue range, this white range, but we're kind of at the middle of that bigger yellow range. And in this pink range, as it goes, we're at the bottom of this pink range that I've drawn here, which may be deciding to go this way. After it's had a little think about it, might decide to go up here. You see what I'm battling with, these different ideas, and you see how the difference would have been if this was here. I'd be saying this is a 10 out of 10 out of 10 potential trade. I'm just waiting for my confidence of getting in, and I'd be even more inclined to get in with some extra vigor, because we were at the top of the top of the top. Do you understand the difference between a 10 out of 10 trade and me kind of saying, it's looking all right, we're at the top of this range on top of another range? It's just the fact of we have to lose a mark because of where we are on this bigger range. We're losing a mark. Okay, where we're going to have to lose a mark. I'm not going to say so much on the pink range because we've kind of broken outside of that pink range, which is a good sign for it deciding to do something else. But then again, it could just be having to think about it. Yeah, and then when it starts to push up in here, we're going to end up having to change our angle. It's not impossible. It's very possible. All right. So that's what's going on right there. So like I said, I've got my alerts in. I've popped my alerts in. I've put my alerts in above the consolidation, the smaller one, and above the large consolidation. I'm done. I'm finished. I don't need to do any more with this. It's not ready for me now. I cannot hit the button now. Now it's doing the candy dance backwards and forwards. Okay. I don't want to get involved in that. Let me get rid of this. Yeah, I don't want to get involved in this energy. This ain't the energy I want. All right. If it starts to break and do something, I could decide I want to get in here for this sell down to the bottom of this yellow range. I don't really want to. Why? Because we're in the middle of this bigger yellow range. In an ideal scenario, I only want to take action when this market breaks either this, what color should we make it? Yellow line or this yellow line. I'll be honest with you. All right. Next was, what was it? XAU USD was the other one you wanted to look at. It was GBP USD and a US 30. All right. Let's go and have a look at US 30. All right. US 30 USD. Get out of futures. See, it doesn't exist in futures. exists in Forex. Sorry, indices. Yeah, but yeah, Forex indices. Yeah, same thing. All right, ish. Yeah. All right, so let's go. Let's hit everything. Let's delete everything. Right click, remove all drawings, zoom all the way out. Oh, why are we zooming out though, Jade? Because that's it. That's our process. We zoom out. If you don't want to do the whole process because you're so busy, then that's down to you. All right. This is our whole process. So we can see this chart in its entirety going all the way back down to 2003. Well over 20 years of data. All right. So that's enough data for us to form some conclusions. All right. So I'm going to do this bigger line. This bigger line takes into consideration COVID and, the crash, 2008, or whatever it was. All right. And then I'm going to do this. I don't think anybody can argue with me that market was trading. Maybe we could draw the lines a bit better. Could agree. But the market at some point was kind of trading within this range. We could also eliminate those anomalies. Okay, like so. Have a look. Boom. By pretending that if those anomalies, i.e. COVID, i.e. this crash, okay, didn't occur, then the range would be like so. Okay, can you see? I think so. Look. Hi, hello, hi, hello, hi, hello, hi, hello, hi. Oh, COVID. Something mad. All right, let's get back to the program. Hi, hello, hi. Do you understand? So right now, based upon that, let me ask you guys some questions. Hopefully you're still listening. And it's not just me talking to myself, hopefully. Who knows? Anything's possible. All right. Boom, 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 boom. We're going to ignore COVID. All right. Boom, boom, boom. Where right now could we be expecting this market to go? Bullish or bearish from where we currently are?
Bearish.
Who's got a different idea? Who's got a different idea? Nobody? Everyone thinks bearish? Well, I think maybe bullish. Because, look, the point I'm making to you is this market has been ping-ponging in between this thick yellow line and this lighter yellow line that we see, which doesn't take into consideration COVID-19 or the crash, all right? And we haven't quite ponged, have we? Look, we've pinged, ponged, everything else is pinged and ponged. Everything else is pinged to the yellow line, ponged to this line, pinged to the yellow line, ponged to the faint line, pinged to the yellow line. Okay, COVID is the anomaly. Pinged to the yellow line, ponged back to our line. But we haven't quite pinged back to our thick yellow line yet, if you really want to look at it. So there's a very high possibility, in my opinion, that we're trying to ping back over here, especially as we're in the middle of a range. And it's like we don't really know. What do I mean that we're in the middle of a range we don't really know? I mean, look. This market got to the middle of the range before. Have a look. Got up here before. I went, nah, we go back down. Got up here before. Nah, we go back down. No, maybe the whole market has narrowed up again. Yeah, have a look. Maybe this market has narrowed up again like so. Maybe. All right. But for me personally, seeing how the market has been pinging and ponging within this range, remember, look, every time it comes to the middle of the range, look, down here, for example, or down here, not so much down here because it did wick down there, but the middle of the range is that no man's land. You see, even here is a really good illustration. If you bought from here, you'd be good. If you bought anywhere along the line, let me make buyers be green. All right. If you bought in anywhere in the discounted area on the bottom of this yellow line, you would have made money. 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 COVID, something else, but no, you would have made money. You would have made money. You would have made. You would have made money. You would have made money. Okay. If you sold, even though it's the more difficult trade and you wouldn't have made as much money because the market's not trading in your direction, as much money if you held your trade. Look, have a look. If you sold up in these levels, let's go here, you would have made money. Every time this market come up and touches this line here, maybe you'd made a little bit of money. You would have made money. Remember, this is the more difficult trade. This is against the trend. Okay? You'd have made money. You'd have made money. You'd have made money. You'd have made money. Do you understand why we want to always be selling in a premium, buying in a discount, and especially trading with a bigger trend? Because you see here, for example, here was a little bit like you would have made a bit of money. Because remember, these are monthly candles. Don't get twisted. These are not 50-minute candles, but I'm just showing you that energy. So therefore, if we're thinking this and we can see this pattern, that down on this yellow line here, we make money. Now, right now, there's a spanner in the works because there's this little smaller narrowing here of the market where the market's been having a reaction to this little range here. That's a little spanner in the works. Why? Because we're kind of in the middle of the range. Like I said, we're a bit, yeah, and if this market has pinged and then ponged to the green, the next one I'm expecting to see is a red dot, which is it pushing up here. You get what I'm saying? But it's just this concern that I'm having that at the moment we've been doing a little bit of a silly little jig in this smaller, narrower range. Let me drop my time frame down to daily now. Give you now more perspective. Now this is going to look a bit more clearer. How we can see how the market was kind of pushing up here bullishly. And to be fair, I'd have to draw my range like this to here. Why, Jay? Why like that? Why do you have to draw it like that, Jay? Because I'd like to touch, wherever I start my energy from, I'd like to touch the last low before the highest point. So for argument's sake, I could just do this. That's the range. Market came up here, pushed up here, went sideways for some time, broke out structure, it's coming over here. All right. Now, if we drop out, let's stay in the daily. We can see that on a daily time frame, this push here broke some significant structure. This is structure. These levels are structure. Okay. It broke past them, indicated, corrected, continued. This was a significant structure sitting on the blue line. All right. We do start getting some minor structure moving away from the blue line, but this was a significant one. And that would have been a great entry after this indication, correction, continuation here, that you took this trade and rolled it all the way down to here. Remember, this is the daily chart, loads of pips. Now, the market pushed down here and it's broken some structure, and we understand that the market's moving waves. So after an indication, we understand that we may get a correction. And we have got a correction at the moment. Let me try something at the moment, pulling up from this high down to this low. But that correction at the moment has gone all the way to the 618 and into something that we call the golden zone. This market, this is the golden zone between the 618 and the 786. As it's an area the market likes to move to between the 50% and the golden zone. They're both little, they're both heroes of their own little movies. All right. They're both heroes of their own little movies. Okay. So in our brain, I'm thinking to myself, this could be the indication. This could be the correction. And this could be a continuation down here. But I'm also thinking to myself, I'm also a bit concerned because we're in the middle of this bigger range. Does this market actually want to start violating and start pushing up here higher and higher and higher? This is the problem with US 30, where it's not a foregone conclusion at the moment. All right. It's trading. Let me make this a little bit thicker so you know what that bottom end is. It's been trading in here. All right. So does it now want to look on a smaller range? Remember that on the bigger range, I was saying that we want to see a red dot, but on the smaller range, this market's been making red dots here, here. Is this another red dot here for it to then come and make a green over here? This is the question I'm asking myself. So I'm saying, really, I'm thinking to myself, this market should be trying to get up here to make a red dot over here, ping pong to the higher, the larger range. But we're in the middle of this range at the moment, and I really do not know. So I have to be very diligent or leave it alone. I've got to be very, very diligent and understand that the market could do either or, that the probability isn't massively, isn't a 10 out of 10. Now have a look at this. I've got this little line in here. Let me make it a little bit better. Actually, it's not a line. It was the line I pulled out for the fib. All right, let's do this. I've got this line in here. Why have we drawn a line like this? Because I must touch the last high before the lowest point of a bearish run. Okay, like so. The market indicated, the market corrected all the way down to this level here. All right. Now, because it corrected in this fashion, when it comes and breaks this high again, I really would like to see It's two scenarios. Either as soon as it closes above this high, I can enter this trade if I wanted to buy it, yeah, with my stop below here. The reason I wouldn't do that is because I believe that this is a correction and it's going to be coming down at the moment. That's what I believe. So I'm not going to get in a trade on the basis that we might only get up to here. That's me taking a trade for one, risking one to make 0.6. That's a dumb trade. So that wouldn't be an option. The option that I'd have in here is somehow I ever got in here much smaller down here, which is very possible. And I decided to trade the correction. But now we're up into this 618 area. I'm waiting for my confirmations, baby. I want to see that thing turn around. Yeah. I want to see it turn around and do something. Yeah. So look, here's the bigger range. Here's the bigger Russian doll of this correction. Like so. Straight away, just putting this blue line over here makes me think to myself, maybe this market might want to push up some more into this range. I can see imbalances when I look left and I look into for actual data. I can see imbalance in here. This is actual real true data. I can see imbalance in here. The market might want to give another little heave, push over here. So if I was to draw another line in here, watch, touching these data points from down here, this one that we can see over here, like so. Maybe the market wants to respect that little trend line there and push up a little bit more. Maybe. But what I'll be waiting for here is I'll be dropping my time frame down on an hour. Have a look at the hour now. Look, getting more information. Yeah, getting more information. Higher highs, higher lows, higher highs, higher lows. Do I want to take the trade and potentially get some benefit of this little higher high push into this area? Well, when it comes to US 30, it's still a trade you could take because that's 220 pips. Now, if I could get a good trade entry, great. But my target's going to be as soon as I get into this imbalance, I'm going to be having making my thing risk free, making sure that I'm taking my profits because I'm really ultimately at this point believing that this market might go in this direction. So what should we drop my time frame down further now? And let's look at this. What's going on then? On a 15-minute time frame, we can see the market was bullish. Have a look. Bullish over here. If we want to draw our lines, we can draw our lines. I love drawing my lines. All the people that hate some man drawing trend lines, that's them. Good for them. Yeah, I love drawing my lines. Gives me a guide. And then I can see the market came down in a lovely little structure. No drama. Very clean. Lower lows, low highs, very narrow, like it's building up to do something. See, when candles get quite narrow, quite small, it's like they're winding up. It's like they're running backwards and forwards, backwards and forwards, backwards and forwards, they're getting agitated to explode. All right. The question is, where is that explosion going to be? Is news or some sort of other catalyst going to be an excuse for this market to explode into here? Yeah, close this imbalance and then start doing this. Is something else going to happen? And this market's going to decide to go and do that. Yeah. So we're looking at this right in here. If I drop my time frame down to my 5-minute, have a look. We can see how that market there is trading within this narrow range. I can draw it a little bit better now, but it's good enough for me. It's just a guide. Do you understand what I'm saying? It's just a guide. I don't get too anal with these lines. This is a guide because I'm still waiting for structure to break. So right now, this market, there's nothing telling me to buy this market. And ultimately, I don't want to sell after all of this massive sell run and I'm at the bottom of this white range. Can you see why we put in these lines? We put in these lines so that we can constantly identify where we are. Without that, I'm going to have to keep zooming out, understanding, okay, there's a range like this, and then zooming back in. Like once I draw it on there, it's in there now. So we can see here this really tight range coming down here. Neat, very neat. Look at it on a 5-minute time frame, how neat it is. Yeah, just making some, a bit choppy, but slightly pushing down, slightly pushing slightly. From right now, where we are right now, the market is ever so slightly trading within this range here. Look, this is the lowest point. Yeah, this is the highest point over here. The market is ever so slightly in here. Let me try and zoom in closer. Yeah, that wick is the lowest point. There's a little box in here. This market's kind of in here. All right, let me make it a color. Let me get rid of extending it. Market is kind of in here at the moment. All right, made this low, came up here. That's the high, but I'm saying to you, that's the high, sorry. Like the market's in here at the moment. So what am I going to do? Use my good old alerts. Alerts are like AI. They come like AI. I'm programming them now. What I'm saying to TradingView is I'm giving them an order, a command. I'm saying when the market breaks this level, even if I'm not at my desk, even if I haven't even got my TradingView open, but I've got the app on my phone, or I've got emails, or I've got notifications, I would like you to tell me when it breaks outside of this box. And it says, yes, sir, no problem. When it breaks that box, this line here, look, if I right click this and I click alert lines, when it breaks these dotted white lines, it's going to ring. It's going to send, have a look. If I double click in here, it's going to ring. It's going to notify me on the app. It's going to show a pop-up on this screen if I happen to have it open. I could make it send me an email. It's going to play a sound. Yeah, it's going to do all of these things because that's what I've commanded it to do. That allows me to not have to sit here in front of this screen with my mouth open, just looking at every single candle, looking at every single like that. I don't need to do that. I can set my, and when you do set your alerts, let me show you one more time. When you do set your alerts, I don't, but you can, especially if you're only taking a couple trades, you can write a nice detailed message in here. Yeah, you can say, you know, US 30. I don't know which one I clicked now, to be fair. I'll click the higher one and the lower one. Let's see, crossing up. I'll click the higher one. US 30, you know, breaking structure above. You can put in here, you know, what are we expecting from this? Yeah, we're expecting to push, if I get a clean, you know, ICC, then maybe this trade will trade all the way up into the imbalance. You can give it as much detail as you want. Yeah. So that if you were confused or you're at work, you didn't know what you're going to go and do, you know, you can put in here, you know, check size of zone, make sure, you know, make sure lot size is correct in cash back Forex. You can write yourself an absolute essay. All right, in here. And when it pops up, you're going to get all of that information. Look at it. I've just titled it. Look, US 30 break structure above. Yeah. This one here, if I want to go in here, I can do the same thing below. And when that ring is going to pop up on your phone, you'll be like, oh, damn, US 30 buys potentially coming up. You see it? That's how you help yourself. Because this market is run down here, and I can see why it's run down here. Look at it left. If I look left, it came and pushed all the way down here because there was imbalance. Yeah? There was imbalance on the 15-minute time frame. There was imbalance, more than likely, on a larger time frame as well. Yeah? Oops. On the larger time frame as well, there was imbalance. Yeah, on a 1 hour, not so much so. On a 4 hour, probably. Let's have a look. 4 hour. Yeah, on a not on a 4 hour, but on a 1 hour, on the 15 minutes, there was imbalance. There's even another little imbalance down here. All right, on a 15-minute time frame. And you can label these once again. You don't have to get, you don't have to guess. You can label these, you know, make these make sense to you. Yeah. So that's what I'm doing. That's what I'm doing for this one there. That's my analysis of that one. Else the time 925. Let's quickly do GU as well. All right, it's going to be very similar. All right, so here I've got my alerts and I'm waiting to see what happens. That's my analysis of that one. And then the last one is GBP USD. All right. I've already got my buys for that US 31. I'm thinking to myself, it might push up and close that imbalance. It might be wanting to go and pong to the other side after ping-ponging, but it could decide to do either or because of where we are in the bigger range. That's what I've told you. That's what I've said out loud. That's what I'm sticking to. Yeah, GBP USD. I'm going to go in here. I'm going to remove, I just removed the indicators, which I didn't want to do. Accident. But look, let's go over here. Go all the way, zoom out. Hit auto or hit reset, whichever one, you know, tickles your fancy. All right. And then now I can see what has GU been doing, and it's the same stuff. I know GU like the back of my hand. I know that this market has been bearish. I know that this market's in a premium. You know, I'm looking at it, I'm thinking to myself, is this, if I try and touch these, Make these as clean as possible, which is quite difficult. Yeah, it's quite difficult. Right, so is this, I know this market's in the premium area, does this market want to turn over right now? Is it mucking about? I think it's mucking about. I think it's thinking about it. I think it's waiting on some sort of event. I think we're going to see very soon that this market decides to roll over. I think there are fundamental reasons why this market's going to continue going down. I haven't been told by Alan or anybody else yet of a reason why GBP USD is going to start gaining tremendous strength
I
against
could
the
tell
euro.
you now, Jay, Ram Rising all.
Let's go.
It's interest rate day today. So the market was going down since Tuesday because there's interest rates at 12 o'clock. That is the reason why GU has been continuing spiraling down. And they believe the Bank of England are going to hold rates. And so it's been negative on the pound. But however, also the dollar's strong anyway against the G10 currencies. But that is your angle. That is why GU has been going down. 12 o'clock, you're going to see a massive spike in either direction. And then it will continue going where it's going.
Thank you for saying that to me, because it kind of confirms what's happening in my mind, because it has been trickling. Guys, I was in the sell. GVAM was in the sell. Maybe some other people was able to get some of this sell action of this market falling to hell. I have been, I think one of the days I did tell you guys I was waiting for X to happen before we get in the sell. Now, what may happen based upon what Al just said, I agree. I think because of this constant selling that we can see has been happening, the market has priced in that fact of what's been going on, and the market has been selling off. But in its sell-off, it has left a lot of imbalance. Okay. And at the moment, this is the angles it's coming down here. Now, I'm looking at it like this. There's a very high probability or possibility, I should say, that this market could decide, I don't know what time, depends on what it does before the time of the news. What time is the news coming out there, Al? Let's go and check.
12 o'clock.
12 o'clock. Okay, so it's not, we don't have to even wait that long. All right. So there's a very high possibility, depending on what it does before we get to 12 o'clock. If it pushes down here, capturing some of the liquidity below these wicks, okay, then we may see a spike back up, okay, to the top of the range before it continue going. If it doesn't, it dances around here, we may see a spike up into here with all of this imbalance in here. But ultimately, guys, I am still bearish on this market. I think whatever it does, which may add some volatility, we may get a spike. We may, okay. I am still going to be looking for sell opportunities in this market. We're in a premium. It's dancing around like, like you just heard Al turn around and explain to us that, how strong the US currency is and whatever maybe. And even if we do get a little spike in because of interest rates in Great Britain, I just ain't got no heart in the Great British pound. I just can't see it being great again. You know what I mean? So personally, I'm bearish on it. All right. Now look, let's go down to a smaller time frame, see what's going on. Smaller time frame. Look how we got this beautiful ping pong, and potentially we want to see a ping back down to this white line, but we're in the middle of a range. We're in no man's land, okay? Remember, this range is always split into three parts: discount, premium, and do jack squat, okay? So here we might see this market decide to come back up here, look, touch up in here first, and then come down here, yeah? Or we might see the market just say, zoop, I want to go down here. The market can do anything, all right? So I would warn you for that reason to be very diligent. Don't go in crazy risk. Shouldn't be doing it anyway. But understand that right now we're kind of in the middle of a range, and in less than an hour, I was saying 3 hours, less than 2.5 hours, we're going to get some news that's going to might see some volatility in this market. If this market even decided that it might, I don't know how hard this interest rate affects price, but I'm a bit concerned by, if I go to my hour, better still 4 hours to save me some time. Let me go to 2 hour. I'm concerned by kind of this whole area over here. I'm hoping that it doesn't break out of this smaller white structure, but I'm a bit concerned by it. This imbalance is in here. And if we do see a spike and volatility pushing up like this, it might decide it wants to come all the way back up into here and before start rolling back down. Either way, I'm interested in looking for being in this market for the sell, but I'm definitely concerned by this imbalance over here. Now, if not, and it just starts pushing all the way down here before 12 o'clock, maybe we'll stay within this range. Because another thing you have to work out is this. You ready? How far is this area from current price? And how much does this market move on a daily basis? Now, if I'm here and I'm worried about a range all the way up here, 85 pips away, or 75 pips away, I have to ask myself, does this market move like that? Does it move 75 pips? Now, I know the market does probably move about that. You know, it doesn't moves about that on a normal average day. Of course, you can have abnormal days. But another thing you can do, what could you do, guys, to try and see what type of volatility can jump in the market on interest rate days and GU? What's something you could do so that you're not guessing and that you actually know or have a better understanding? What could you do? What could you do to be able to have a gauge of, you know, what interest rate information could do to the market? Remember, everything I ask you is never going to be overcomplicated. Just whenever you ask you something, think simplicity first. What could you do? Alan's told you that today at 12 o'clock, interest rates are coming out. And, you know, this can affect the markets, especially Great British Pound, USD, if it's Great British Pound interest rates. What could you do to get some more information about how this could affect the markets?
What would you do? Go on my FX book and look at the consensus or something?
I'll give you quarter of a point. You could go on my FX book and you could do what?
Look at the consensus when you go on the news.
The consensus, I'm not going to give you that. I'm still going to give you half a point because the consensus is, yeah, you know, it lets us know what they thought it thinks is going to be previous, what happened previously, what they think it's going to be, and then when the news comes out, what it actually was. But I'm trying to say, if for whatever reason we just want to find out, does Bank of England interest rates affect these markets, volatility, and how? What could we possibly do?
Use your friend Google.
Could use Google. I'm not going to give it to you though. I'm going to give you a quarter of a point there. So we've got half a point so far. What am I fishing for? I'm fishing for something. I'd click into this.
Okay. What you can do is go back in time and see what the effect was on the market
previously. Go back in here, click Bank of Rates, you know, the interest rates. Go to history. Look, it's giving you everything you need. It's giving you everything you need. So look, it's even giving you great information because it's showing you that when they thought the consensus was going to be 5.25, previously 5.25, they thought it was going to be 5.25, and it came out as 5.25. You can go and look, and at least for 1, 2, 3, 4 data points, be able to see what happened to the market. This is actually fantastic information because today they think the same thing. They think it's 5.25. Oh, it was 5.25. They think it's 5.25. So you can be able to see what that happens. And then you can actually use the ones where it came out less and more to see what happens. So let's go and quickly do that before we finish up. We're going to go look at November the 2nd, 2023 on our chart. All right. November the 2nd, 2023. US 30 is doing something. Let's go and look at November. What time was it? At 1 o'clock. All right. At 1 o'clock. 1 o'clock at the clock. Click go to. All right. And that was here. November the 2nd at 1 o'clock. In my opinion, absolutely naught happened. Yeah. Afterwards, let's see at 1 o'clock. Nope, nothing happened. All right. Let's go and plot another one just to see whether that was just a. Let's go and plot December the 14th, 2023. So we're going to go in here. The 14th, the 12th, because at 1 o'clock as well. Right here, this one's a bit different. Something, let me just have a look. Oh, I'm on a 2-hour chart. I was wondering why I couldn't get onto the actual number. Well, we can see here that there was some bullish energy that happened in the market. I'm trying to get to, let me get down to 1 hour and have a look. Yeah, so from that 1 o'clock, we did see some bullish energy and the market actually moved by what time? By 4 or 5 o'clock, that market actually moved over 100 pips bullishly. Okay, cool. If we was plotting this in a chart, we'd be able to say, okay, boom, boom, boom. Let's go and look at another one real quick. Let's look at February the 1st at 1 o'clock, 2024. All right. February the 1st, 1 o'clock, 2024. Over here again. And when it came out at 1 o'clock here, when that information came out, within the hour, again, we saw some bullish energy in the market. So after 1 o'clock, when the consensus came out exactly what normal like that, we saw this bullish energy that pushed this market well over 100 pips again. Let's look at one more, which is March the 21st, 2024, which is 21st of March, 2024. Hit the button here. Then we saw some bearish energy in here. That one's in the not through a spanner in the works there. Okay. That went through a spanner in the works. All right. So what have we learned? Let me go and check something one more time. That last one. What have we
There could
learned?
have been US news dropping that same time though.
Could have been some other factors. You're correct. Okay. It could have been. Let's go back and look at our charts. And I'm going to zoom all the way out to the daily. And let's have a look at the dailies on those, looking for my yellow lines. Oops. I'm looking for my yellow lines of what I drew on a daily time frame. Zooming all the way out. Where are my yellow lines? Where are they gone? They're here. But what I would say is that those previous consensuses were all in this cycle here of the market, which was sideways action. All right. Then previous consensuses, or the previous data points, sorry, were all at a time when this market was going sideways. Okay. Now, if this, what we do want to have a look at right now, I'm going to do one more. I know we're running on a little bit. I'm going to do two more, sorry, of when this market came out worse than expected and when it came out better than expected. So I'm going to look at this one, the better than expected one first, which was June the 22nd, 2023. All right, let's go June. At 1 o'clock. Oh, I need to go over here. Sorry, I'm too tight. Let's go an hour. So when the market, news came out, June 22nd, 2023, better than expected. Yeah. Result is in a higher interest rate. We saw over here some volatility jump in our market. Some real volatility jumped in the market where that market moved high to low over 100 pips up and down. All right, let me put a little yellow line on that because I want to investigate what it did first, then what it did second. So if I go to 15 minutes, do that, go back over here to that time frame. Obviously, it's not giving me the data because it's a hater. I've got to half an hour. Let's see what it's saying, if it's going to hate on me. We saw this market, we had a better than expected result. We saw some volatility happen there. Like, I really want to see what happened in this candle, how it moved. But a better than expected result, a higher than expected result, gave us this volatility. I'm going to look at one more, and we're going to finish up here, which is this one, which is a worse than expected result on September the 21st, 2023. All right. And things like this, guys, there's things you can do, try and build up a picture for yourself. So based upon what you see what happens. So this is September the 21st, 2023. September. Oh, did I get it correct? What's that say? 23rd of September, 2023. 21st September is what I wanted. See, I knew something was wrong. 21st of September, what I wanted. 21st of September, 2023. Okay, it's better. You can see this volatility again, right on, before actually anything happened, but within that hour, you've seen this volatility, market pushing down 20, 60, 70 pips. What have I learned? Has to be honest, off of a knee-jerk reaction of what have I learned from looking at that data? Not that much. Yeah, not hugely that much. Okay. I've learned that obviously when it's off of that consensus, we're going to get that volatility. I've learned that volatility is in the range of about 100 pips. Okay. So now if I look at current price over here and I'm thinking to myself, could this market push in any one direction with volatility 100 pips? Where is 100 pips? Well, 100 pips could definitely be, look, can we measuring it? From where we are, could definitely be up into this imbalance. It's like 100 and something pips. Okay. Let's look at it in the opposite direction. 100 pips around the 100 pips level could be, is there anything going on down here? Could be into this imbalance. All right. So, I'm identifying things that are further away from the market. And if we see some volatility happening to the area, maybe these areas are an area that we may be interested in taking trades from. But overall, I already said that I'm more, interested in getting involved in this market for the sell, So I'd prefer from here, we had some sort of push up and then the market started breaking structure bearishly. If it pushes down, if it pushes all the way down straight away into these levels, well then, yeah, that is what it is. And hopefully I'm either in that trade brief beforehand or not. So yeah, we will wait to see what happens. All right. Like I said, sometimes when it gets too techie and you're thinking, I'm not too sure, you just stay away. All right. You just simply stay away. Remember that news is at 12 o'clock. We have got over 2 hours for that news. So in between that time, maybe the market will tell us a lot based upon if it starts to just slightly pushing up outside of this range or starts pushing down already and we're already in this range, or maybe we're going to push back up, or need to come back down, etc. All right. So we will see. All right, guys, any questions? Any questions about anything? I'm gonna play something which is called New Freedom. All right, poverty versus stress cycle, millionaire trader money, mindset. It's featuring 19 keys and the Wall Street Trapper. Okay, these are two American villagers that are on this personal development, financial empowerment, especially for our people that look like myself. And it's interesting to see how the American Mandem are doing it. So I'm going to play that. If you are able to listen to it, I've never watched it yet, but I'm sure they've got something to say. If not, I'd like you guys to absolutely have a great day. I don't know if anyone wants to say anything, wants to give us any information. Remember, brother Jason is boxing. I do want to promote it. We can get down there and watch him, see what he can do, and whether win, lose or draw, it's a huge achievement to undertake the personal journey of going to the gym, of, you know, doing something new, being brave enough to stand up in front of your peers and family members on the basis that you're putting your own pride and ego aside. People don't understand what it takes to be in combat sports 1v1. People can hide in a football game. You can hide in a basketball game. You can hide in whatever it may be. But you see, when you stand in the ring and it's you as a man versus another man, that's you putting your heart on your sleeve and being willing to fail in front of friends and family. Yeah. And that's something that you should applaud regardless. You know, you don't really think of it like that. But when you think about it, it's not like to say he's going having his boxing match and not telling anybody about it. He's telling everybody about it, you know, putting the pressure on his shoulders, challenging himself to be, better. So congrats to yourself there, Jay. And definitely I'm going to be down there. A couple of the fellas come and support. All right. But guys, good morning. Good morning. Good morning. God bless. I'm going to be playing this video and I hope that it, enlightens you and gives you information. Hopefully you learned something this morning, but love and blessings to everybody's on the call.
Y'all in the
Amazing
game
day.
played by them devils to keep y'all
Amazing
operating
day,
like
family.
that. And most
Amazing
of
day.
y'all is bought, sold, slave suckers. And y'all know that your fan base is like that as well.
That's what happens when some of us get 6, 7-figure job. Slave.
That has been saying, yo, the shift is coming, the wealth is happening,
Yeah.
right? Buy into this, investing in this, here's the strategy. And we know that y'all in the gang played by them